Hi, welcome to our episode today. Today we'll be talking about double entry principle application in real life circumstances as an accountant in business or an accountant in practice. Often, some accountants find it difficult to figure out the right accounting entries for transactions because of the poor understanding of double entry principles. So in this video, we will be talking about the application of double entry principle in real life circumstances as an accountant. So first of all, let's go into what this principle is all about. So double entry principle is about how transactions are being treated in the general ledger accounts. So there are different general ledger accounts that is created in the chart of accounts. So that is another talk for another day. But today we'll be focusing on the accounting entries. So this principle states that for every transaction, there are two accounting entries involved. The one accounting entry involved is the debit entry, while the other accounting entry involved is the credit entry. And the principle also states that the debit entry must be same as the credit entry for you to have a balanced statement of financial position, for you to have a balanced trial balance. Your debit entry must be same as your credit entry. It doesn't necessarily mean that it has to be same because there are some transactions that will have only one debit entry and more than one credit entry. But at the end of the day, the sum of the debit entry and the sum of the credit entry should be the same. That is what this principle states. So let's use a scenario to illustrate this. Let's say, for instance, I'm in Aminako Limited, purchase food from Kika Limited at a rate of 10 naira and cash was paid immediately. So in this kind of scenario, you will notice that two accounts are involved, two general ledger accounts are involved. The one account involved is the meal and entertainment expenses, which any organization can decide to call it food expense, kitchen expense, depending on what the organization wants to call it. Some people will call it meal expense, but for the purpose of this video, we are calling it meal and entertainment expense. Yeah. So there are two accounts involved: meal and entertainment expense and cash in hand account. So for this transaction, I'm now limited purchasing food from Kika Limited at a rate of 10 naira and cash was paid immediately. Two entries are involved. The first entry is you have to debit the meal and entertainment expense account with 10 naira and you then credit cash in hand with 10 naira. You then put a description: purchase of food from Kika Limited. You can put the document reference number involved. You put the date. If you're using an accounting system, there's a space where you can put the document reference number. There's a space where you can put the date, and then there's a place where you can indicate your description to narrate so that someone that looks at the general ledger will be able to understand what the transaction was for and from whom and all of that. So that is basically what double entry is. Thank you for watching. Thank you. Yeah.